We'll be getting started in just a second. And we should be live on Facebook. Hi everybody, welcome to the Strategic Swing Trader. I am Sami Abu Saad, Director of Education at T3 Live. I hope you've had a wonderful weekend so far. Let's go ahead and get started. Actually, before we start, real quick, a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. Also, if you'd like to download a copy of my free ebook, link for that is in the description. But without further ado, let's talk about the market. Let's go over the swing ideas for tomorrow and see what we can find. I'm going to, so let's see, hold on just a second. I'm going to project the charts. Here are the charts. Okay, there we go. So first, the market. The Qs does look like it wants to pull back a little bit. Notice away from the 20. Looks like it wants to pull back a little bit, but it's nothing certain about it because we're not really that extended. The hourly 20 MA is hugging price, so we don't have to pull back. But if you look at Apple, you know, here's the daily chart of Apple. It does appear to want to pull back for a day or two. And Apple, obviously being the biggest company in the country, would drag the market down a little bit with it. Microsoft also starting to look like it wants to pull back. Amazon already put in two big red bars. Facebook looks like it could pull back for a day or two. And so that's why I say that the Qs might be due for a pullback. But if we look at the SPY, look at the moving average on the hourly chart. Look at the daily. Again, it doesn't really have to pull back. It can just keep grinding up. It's not overbought. It's not overextended. It can just keep going. IWM, similar also. So with that said, here's my bias for next week. Bullish with the expectation that we might see one or two day pullback. But we don't have to see a pullback to remain bullish. I'm not here saying, oh, for sure expect a pullback. I think it's likely based on Apple, you know, Facebook, but more so Apple and Microsoft are starting to pull back a little bit. And the Qs as a result looks a little toppy to me. So we might see a day or two worth of pulling back, but not much more than that, in my opinion. And the bias overall should be bullish. Okay? All right. We're going to now go over the swing ideas for next week. Before I do so, if you want to help support our channel, please be sure to hit the like button. We would appreciate that very much. And let's get started. AKBA. I had the AKBA in the newsletter as an idea. We have a lot of long ideas. Last week was phenomenal for the newsletter because the market moved up nicely, so we caught a lot of good plays. I caught a lot of good plays, and as a subscriber, if you're in the newsletter, obviously, and you participated, you caught a lot of nice plays. So I had this as an idea, as a breakout in the newsletter, but it wasn't one of the official plays. So in the newsletter, I have a section for official plays, which I take, and then for additional ideas to consider. So this was an additional idea. I didn't take it, and it popped nicely, and it still looks higher. It just needs to take this bar out with the stop being under it. So long over 425 by 408. So 426 would be the minimum. Yeah, that would be the entry. And the stop would be 407. Okay, on the AKBA. AMWL has a transition A breakout. So that's a breakout on the daily chart. If you look at the hourly, it's even maybe better. So just over the base long, stop over $14, let's just say. Stop under $13. About a $1 stop, that would be maybe target 1, about around 15. That's actually too small of a target. You could target, one could target the prior high right here. So around, more like around 1750 or so on the AMWL. AVIR is another transition A. I perhaps like this more than the AMWL on the hourly chart. Look at the hourly chart. Looks pretty. So over the base, stop under, and target up here. So the target on this would be around 37 bucks or so on the AVIR. BTX already is an open play for the newsletter for myself. We took it this day long, and it still looks higher over 1935 with a stop under 1715. Okay, so it still looks higher. I'm targeting 21 something, yeah, 2150, but you never know, it could also pop to 30 bucks or so over here. I'm not expecting it to go all the way back up to 80 or 70 or 60 or 50. Just to 21 is would be nice, would be a couple R's, couple risk units basically, or to 30 if it can go through 2150. I think, you know, it might see 30 bucks. Okay, on the BTX. COWN is basing up the highs. Okay, here's the chart. Broke out on Wednesday, put in a narrow body bar, and then kind of a narrow range red bar on Friday. So it just needs to take out 44.05 with a stop under 42.30. And I think, is this at the all-time high? It is. So there is, no, it's not. It's not. I was gonna say, so there would, I couldn't really calculate the target in advance if it's at the all-time high, but it isn't. Probably to 60 bucks. Amazing. This stock has been in a downtrend or a sideways trend really since 2006 up until 2020. So many stocks broke out in 2020. Look at this. Been in a downtrend, and then the last decade or so just sideways up until 2020, and then since then it's been doing really well. So that's the COWN. Next on the list is DSS, which has setting up for a breakout. I don't like them when they base for that long at the bottom, so it gapped down and it's been basing. But look at that hourly chart. It looks higher, doesn't it? So look at that hourly chart. So I like it over $1.84 long. Stop could be as tight as $1.75, so it would be about 10 cents, 12 cents, or safer, more secure would be under 160 something, 165. Okay, this should be about 164, and then target the 20 MA on the daily chart. That's the DSS as a long. If you're a subscriber, the newsletter has already been completed. If you want to see which plays I picked, I didn't pick too many because as I said, I'm expecting the market. I think it's likely that the market would pull back for a day or two. So I only picked 3 longs and 1 short for tomorrow. Obviously we have a lot of plays, but 99% of them are in the money. So I'm actually looking to trail out some of the ones that we're in. Like for example, the REVG or something, not REVG, that's the biggest one. It's the RVLV, you know, up nicely. Okay, let's trail some, at least, if not the whole thing. So for the most part, Lulu got to target 1. The target 2, I'm just trailing it under Friday's low. Okay, so for the most part, since the market moved up a lot, this would be the time to, and I'm thinking it might pull back, this would be the time to actually tighten the trail on some of the swings, not get started with new ones. But there are some swing plays here that I really, really like. An example of that would be the HZMP, which is setting up for a breakout over a 3-month base, at least. Yeah, since it's a 4-month long base. So I like it over the all-time high. Look at the HZMP, guys. It's a little sloppy, but super strong, basing at the all-time high. So I like it over the all-time high, 97.36, but it's also a spready stock. So I like to give it room, not put the stop right at 97, right above 97.36. So I'm giving it a little bit of room. I like it over the high, and the tightest stop on this would be under this pivot right here, 92.50. Okay, safer would be to put it under the whole base, but that would be way too big of a stop. So I'm just putting it here under this base. IBIO is a daily buy setup, so like it higher over $1.60, stop under $1.50, and target 1 would be around $1.75 or so. Target 2 would be this big red bars high on the IBIO. IMVT looks like it tried to go lower right here, didn't work, didn't follow through, so now it looks higher to me over $1.40. They actually took out $1.40 on Friday. So over $1.50, just over $1.50, 47. But let's just say over $1.50, 11.50 that is, with a stop under 10.70, 10.69. And the target would be, this bar is high for target 1, that's $13. Target 2 would be around $15. MA already triggered, I didn't do it, but already triggered this day, so that was Tuesday, I guess, of last week. I really like the MA long on the weekly chart. Look at that weekly buy setup. Looks beautiful as a long-term trade. Triggered already, but it has another base. So long over this base, stop under it, target the prior high, or long-term, don't even touch it, because it just goes higher all the time. I mean, look at the weekly, look at the monthly. Just bullish, looks higher, not overbought. Okay, so I like this actually long-term. MDCA. I was in it at some point and I got trailed out, and it looks higher over this pivot right here, over 576, with the stop being 466, 465. It's a dollar stop, $1.10. Look at that monthly chart. It definitely looks higher to the 200 MA. Okay, look at that nice rounding bottom. This is like similar to the GSM. GSM, see that GSM, and we were in the GSM at some point, working its way up. Look at that nice monthly breakout, similar to the PRTA also, which worked already. Okay, similar to BEKE, I think. No, not BKEP. BKEP, I think, on the monthly chart. See that nice breakout, how much it rallied. So it's similar. It's a pattern that I do a lot. And I think this has room to about, not quite $10, but let's just say about 850 or so on the MDCA. Next on the list is REI, which is an open play already, another transition A on the monthly chart. Like it a lot, over 316. One could put the stop under 294, or safer would be under 265. That would be safer. Looks higher. Nice big rounding bottom. Okay, on the REI is an oil stock. Rocket is not something I'm gonna do, but it has a 1, 2, 3, 4 play. Igniting bar, narrow range bar, and if it takes out the highs of the last Thursday's high, it would trigger a 1, 2, 3, 4 pattern. Long over 2041, stop under 1984. Okay, the issue with it is there's more resistance not too far above. Right here, the 200 MA, that red line, and then 22 would be the other resistance area. So it doesn't really have enough reward to risk for me, but it does look nice, especially on the hourly chart, the RKT. Okay, the SLS is similar to the COWN. You know, broke out on the daily chart, put in a couple of narrow range bars, broke out on the daily chart, put in a couple of one narrow range bar, let's just say. So if it takes out this bar's high, $14, stop under, the tightest would be 1280. Okay, it would be a breakout. If these bars were slightly smaller, the same with the COWN, if the bars were small, I would do it. It's exactly like the RVLV, which we did. Okay, but small bars, so much cleaner breakout. But they're not, these are not quite ready, I think, so I'm gonna let them go. SNAP is similar to the HZMP. It's been basing for a while. Look at the weekly chart. Been basing for a while. Broke out already on Wednesday. But it has put in a couple of narrow range bars so far. So I like it higher, over 69.35, with a stop under 66.65. Okay, so not bad as a longer term play, like the HZMP. The HZMP being the favorite. From the shorts, I like BIIB as a short under 345, 345. Let's just say 345, the whole number. Stop would be over 353.60. Target, it has room to 300. Will it get down to 300? I'm not quite sure. That would be a really big drop, but it has plenty of room to drop if it wants to. The Cpng is starting to break down. If you look at the weekly chart, it's a sell setup / breakdown. So I really like it under Friday's low, which is 37.33. The stop is tricky. The safest place to place the stop would be right here, but then that would make for a really large stop. That would be about $3.20. So one could also put the stop over 38.64. Would be more, less secure, more easy to get shaken out of it, but much tighter stop. It looks lower to the prior low. On the Cpng, GLW is a daily sell setup. It's a little bit too strong. I like the big rounding top right here, but the rally, the most recent rally right here, was a little too bullish for my liking. So I'm gonna let it go, and if it comes in a little bit, bases, then I'll do the base breakdown right off the hopefully it'll be right off the declining 20 MA. The blue line is the declining 20. Okay, GMTX, it broke gap down on Wednesday. Couple of narrow bars, like it lower under 638. Stop over 725. Okay, 638, about a 90-cent stop. Target, if it's at all-time lows, yeah, it is. Then no way to guess to be able to predetermine what the target is. HYMC, we were in it short from here, and then we trailed out over this bar's high. It made a little bit of money. I shorted it under the space and then covered it here. Little money. Didn't follow through that much, and now it still looks lower under the base. Stop above it. So again, it looks lower. Look at this base. It's the opposite. I mean, it's basing at the all-time low, opposite from the market. The market is at the all-time high. This thing is, so there's something clearly wrong with the HYMC, and therefore it should be shorted. But it's also thinly traded, doesn't do a lot of volume, so it's not totally my favorite. Okay, KBH had a bearish gap, breakdown gap on breakaway gap on Thursday. Friday was kind of a narrow range bar, so I like it as a swing trade, only as a swing trade, not a long-term trade. Lower to about $38. Has about $2. Has about $2. KBH. PDCO, similar, gap down on Wednesday, and then a couple of, these are not really narrow range bars, couple of almost inside bars. Looks lower to this bar's low, which is about 28.90, 28.85. Maybe even lower. Maybe goes through all of this, gets down to $28. Okay, but these are not small bars. If they were, I would play it. I mean, I would be the first one to play it. But these are not very small bars, because the smaller the bars, the tighter the stop. PRTG, gap down on Thursday, was a secondary offering, didn't go anywhere. So if it breaks under 24.50, it should be lower to about, that's the 200 MA. I'm not sure exactly what that price is, but let's say $22. Yeah, about 22. Maybe eventually breaks under it and reaches $20. But the issue with it, I like this bar a lot. That's a nice narrow range bar. That's what I usually play under short, above long when there's a setup. The only problem with it is that this was a secondary offering. It wasn't a real gap. Okay, a secondary offering. You know how when the company goes public, it's called an initial public offering, and when more shares are sold later on, but they don't sell the entire company. So when more shares are sold later on, it's called a secondary offering. It's not a real gap. UTME is this is a wacko stock. I mean, this wacky stock because I mean, just look at the craziness here. Went to 75, maybe some news, 76, and then closed at 14 or 15 bucks. Crazy stuff. So it must be a really, really wild stock. I'd be very careful, but I like it short under the base, stop above it, under the most recent base. So it would be under 1326, stop over 1520. By the way, I forgot to mention that the list, the bearish bullish watch list, are in the description of the video below. So you don't have to type them up. You can just copy and paste. All right. This was the video. That was it. I hope you enjoyed it. I hope you're taking advantage of some of the plays that I share with you every weekend. If you'd like to take advantage on a daily basis, I have a fresh new list every single day that's provided to the Strategic Swing Trader members. If you'd like to join me just to try out the newsletter for a month or so, it only costs 49 bucks. Link is in the description. If you have any questions for us, reach out to customer service, info@t3live.com. Email us at info@t3live.com. But having said that, I hope you enjoy the rest of your weekend and have a great week next week. Thank you so much for sticking around till the end. Take care, everybody. Ciao.